Good afternoon. We're going to go ahead and start here in a second. Let me get my cameras on and share my screens for you guys. Here we go. Should be a screen share there. All right. Several of you have asked for us to share what we did on Fed Day because I was touting Fed Day's coming. And there's going to be some wild movement. I told everybody that. You need to know what's happening and what they're planning on. We already knew our analysis beforehand, and we let all of our members know, actually. Here we go. We're going to get into this real quick. I'm going to have to flash this disclaimer up here. That's a disclaimer that you guys have to read through real quick. Um, we're going to get through this in just a few minutes because I have to do a quick one today, all right? So we're going to go through Fed Domination Day on what I love, which is every 6 weeks or so, you have the Fed Day. Real quick, before we get to the Fed stuff, these are the two different services that we offer on iWave.pro. One of them is called iWave Trader, which is an email service that you get reports every morning from us right after the market open, let you know which way the short term, medium term, and long term stuff is going. You also get weekend reports showing the top 10 stocks, what they're doing, and what they're going to be, which way the force is going to be moving in those stocks for the next 1 to 3 months. Okay, sometimes 6 months. And we let you know in advance, and we give you a whole list of the top 10 and what to expect from each one of them with charts and stuff like that. You also get, well, their status, what we call protected or naked. Protected stocks are the ones that are going to have a constant flow of money from the biggest funds coming in, and then the naked ones, which are people releasing their status with them, releasing their coverage of their portfolios. Okay. You also get the long-term nine economic markets from us, which the biggies, I'll go through a couple of them in here. You'll see them before we get to the Fed information. And then that's the trader service that comes on email. Okay. And then if you're on the professional service, you get all of that stuff on the trader service, but you also get the real-time stuff throughout the day. For those of you who want to know which direction's happening today and also where the high or low is going to be of the whole day, and you get a predicted close, you get the algorithms of New York and Chicago and London telling you which way these things are going, which way they're going to push the markets. You also get what we call London revalues, which is extremely valuable, telling you which way that London's valuing it. Okay, that bullish or bearish, and they're going to start to push the market that way. And then you get some other stuff as well. That all comes on Telegram phone app, so it pops up right on your phone. You'll have that instantly as I type it. As soon as I get my analysis, it's boop, 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 and it's right to your phone, and you get it right there, and you see my charts, my screens, and all that stuff. Okay, so that's the professional service, and it's the professional service that we're going to be talking about today, with the Telegram stuff. Okay, that you're going to get. There's a little bit of the longer term stuff as well, but we're going to go through all of it. Here we go. Fed Domination Day. This was something that we did a few Fed days ago, 2 or 3, whatever it was, Fed days ago, and I gave this is an example that I use. I gave four different predictions, five really, on that particular day, and I gave them right after the open of the day, and I said, "Here's what's going to happen." I said liquidity and the algos are bullish for the day. And New York and Chicago algorithms are all looking to push this thing up for the day. The Fed report's not coming for 4 hours, but that's what we're looking at. And then right 15 minutes after the open, I gave what's called the Fed number. And this particular day was 682.40. Okay, and what that means is on that day, because it was at 682.40 on that day, I said the price is almost there right now. It's pretty much going to stagger, and that's telling me it's going to stagger throughout the day and be at 682.40 right before the Fed report. Okay. And so they're looking to clear all their positions before the Fed big movement comes. Okay. And I tell you what price they're going to do that, what price they're going to look to shoot for right before the Fed report comes. And why that's beneficial is because if that number is at 682.40, and in the morning, if the market goes to 685 or down to 680, whatever, okay, I'm talking about the SPY, which is the S&P 500 index, or an ETF of it. Then you know that the market, you can do little trades and you can bounce that thing right to 682.40 and catch little small trades up or down. And then you can be positioned right before the Fed market comes out. And then I also said that with the price being at 683.70 and then the Fed number at 682.40, I said call options are going to lose all their premium for the next 2 hours. And it happened. And so people made some money going into the Fed report. So it kind of can finance your trade, okay? Because everybody knew on that day that we were bullish going into the Fed report, but it had to hit 682.40 first. That's where they were going to rest their positions, okay? So that's how that works, okay? And then that's exactly what happened. You see how the market just shot up after the Fed report. We were bullish, and then everybody was obviously happy for the day, okay? So. We put all that into the ChatGPT, all that stuff that I predicted right after the open. And it told us there was a 1 in 69 million odds of actually doing that. Okay, with that exact number right before the report. Okay, and by the way, it hit 682.40 just not, it wasn't even minutes. It was within the minute right before 2 p.m. of the Fed report. Okay, so, and I gave that prediction, uh, was it 4 or 5 hours earlier? Okay, um, 4.5 hours earlier. And then it did exactly that. Okay. So it's called the miracle prediction according to ChatGPT. And so my quest was I do that on each Fed report, and then I tell you exactly what they're doing, what their behavior is going to be on that day, on Fed day, and the next day because of Fed day. Okay. So that's exactly what I give the pro members here. And then I want to do exactly that each day of what I just predicted on that last chart you just saw. Okay. So on Fed day, yesterday, today's the 18th. I tried to get the report out to you yesterday in this video, but I just didn't have time. So yesterday, what we knew right at the opening was that London was buying on the previous day. The previous day was Tuesday. They were buying at 650, 150 level. It's SPY. Okay. So they were buying. The market opened today, which is I'm going to talk about 618. Um, excuse me. That the market had bounced up. It opened down and had to move up to that 6150 because they had to clear their positions. Okay. And when it got to 6150, they exited all their positions and they were clearing all their long positions. Okay. And that worried me. And I sent a message out to everybody. I said, hey, doesn't look good. Okay. But we need more confirmation before the Fed comes out. I gave the Fed number at 650.6 and the SPX number as well. Okay. And I said, this is the price that they're going to hover around. They're going to try and reach that number right before the Fed report comes out because they're going to clear their orders, clear their positions. Okay. So I also said New York and Chicago algorithms were leaning bullish. They're leaning bullish, but I'll tell you what happened in a second. Okay. So here we go. Here's what happened. The market opened up over there on the left side of that chart. You see it open over here, and the market came right up to where they were buying the previous day. Look at this, right up to 51.75 and 52. Okay, and then it pulled right off. What they did right there, the buying that they did on the previous day, they liquidate excuse me, they liquidated their positions, all of their long positions, they liquidated them, and the market dropped down. I said, okay, they're only doing that for one reason, is because they expect bearish movements today. They expect the market to go down after the Fed report. And then the market came up right here. Look at it, 12 o'clock on the chart there. I issued what's called a London revalue down. I said London's coming in and revaluing this market downwards, which is shocking to me because we had a bullish algorithm that day. I said, hey, this is not good. London's revaluing this thing down. They are expecting all downwards movements here. Okay. And you see that they did come down a little bit for the next hour or so. And then look what they did right before 2 o'clock. They popped it right up to that Fed number I said. Look at where they're at. They're at 650.5 right there, or zero point 0.6 actually. And that's exactly where I gave that number at on that earlier on the day. Let's look at that. There it was right there. Fed number was 650.6. Okay. Look, they came up right exactly to it within minutes of the Fed report coming out right there. So what they were doing is they shot it right up to it, um, to that Fed number, because they wanted to release their long positions. More long positions are being released. That was the third time on the day. The first one was in the morning. The second one, it was when London revalued it downwards. And the third one was right at the Fed number. Three times that day, they were releasing their long positions, which only means one thing. They're going to push the market down. Okay. The Fed's not going to do anything. The Fed's not, doesn't push the market. It just issues a report on interest rates. Okay. It's the algorithms. New York, London, Chicago are going to push the market. Okay. And London's coming in telling us three different times they're going to push this thing down when the Fed comes out with their report. Okay. There it goes. Right at that exact time, boom. It went down within a minute. Shot down. They did exactly what they told us they were going to do, but people don't know how to read into this stuff. This is not an indicator you can look at. Okay. Right after that, we got hours going into the close. The market shot down. Look at this. We had London coming in and giving a value right here. And I told everybody right on their telephone, right on their screen, I popped it right on. I said, London is buying right now. They're buying this market. Okay, their value players are coming in. They bought it and they shot the market up. Look how they push it up right to the algo line. Okay, right to the algo line, right at six, whatever that is, 648.50. And then I issued another one. Look at that red bubble there. It says London is revaluing down now. They are flip-flopping back and forth, okay, because they knew how they can control the market here. They issued short scenarios there. They don't issue buy or sells, but they show you where their positioning is being, and they were revaluing the market downwards, and it shot down lower, and then we got another one. I couldn't believe it. Okay, it was very active that day. London and New York were very active algorithms. London started buying again down at this 740.5 area. Okay, it was extraordinary, but it kept sliding down here for a few minutes. It didn't pop right back up immediately. So when it did that and it closed down there, I said London's only buying for one reason. Okay, the algorithm up there, which is that green dash line, that's the New York and Chicago algorithm. Okay, that's the price they set. That should have been bullish, meaning that the market should have finished higher than that line on that day. But London let us know different, that it was not going to do that. Okay. So if London's buying down there at the bottom, they know that New York and Chicago have to clear their long positions up there at 748.5. Okay. So they're buying there and they know the next morning the price is going to be shot right up there because they're going to do it. Okay. There you go. There's the next morning, which was today. The market opened and gapped right there. And the first thing I said to my pro members was, this is no coincidence on where this price is opening right here. They're liquidating all of their long positions here, which means in the first 5 minutes or 7 minutes or so, I shot people this information. I said, this means they're not going to take it up today. It doesn't mean they're taking it down because our algorithm line said choppy for the day. You see that black horizontal line? That means the market's going to be choppy and finish right in that area probably. Okay. It's going to do nothing for the day. But it means that they're not going to take it up today because they're releasing those positions again, more long positions. That was in this particular case, it was New York and Chicago positions that are releasing their long positions. Okay. Remember, they're liquidity providers. They get caught on the wrong side sometimes. So the market has to be pushed to where they can get out without losing money because they don't do this to lose money. Okay. So this is how the markets work. Nobody could possibly know this information, know where these turns are going to be without knowing this type of information. New York, London, Chicago algorithms run almost everything. Okay. There's another scenario that I reserve for my bigger clients, but um, that really controls the whole deal. But you see what's happening here. We can look at each one of these moves and how they're controlled. All right. Fed Day is just something I love because it amplifies everything. It shows it plain and simple of what they're doing and what their powers are. Now, they do this, believe it or not, each day of the week. And they do it definitely every week, as my members know. You see it constantly. Okay. So here's another thing, and we already looked at that and talked about this stuff right here um, on what you get with each different service. But here's another scenario that you get. You get the short-term index direction, which is a multi-day scenario. It gives you signals like this, which lasts for quite some time. And we try and give it to you to where we know we have confirmation that they're going to take it down or up right now. Okay. So if we know the move is big enough, we're going to issue a scenario the other way. These are our actual real-time signals that we gave. We gave to our members. These are the actual charts. Okay, you don't have to worry about the dots and everything. Those are called dealer book values, which we'll get into that another time. But so there's three signals on this chart right here, and that one bear signal. When I gave that signal right there in bearish, I said I have to give this signal before the close here today, because if I wait till tomorrow, there's a possibility it could gap down big. So I'm giving this signal, but there is a dealer book value level right in our way, and the dealers may get in our way and turn this market right here. If they do, Don't worry about it. We'll reverse back to the upside. Okay, that's what I was talking to members about. And then they did it. They reversed it. I said, okay, no harm done. It's just a little bit, very small scenario. And then we're expecting much bigger move to the upside. I issued the bull signal, and that's what happened. Okay, went to the upside. All right. We also give you in the trader service, all members get this, our stock scenarios when we analyze the top 10 stocks in the SP 500 for you, okay, all the biggies. And we tell you whether they have a protected status, a bullish status. Protected is highest, means that market is just going to be kept as much as possible. It's going to be kept from going down. A bullish status means it's bullish, but it's a little bit weaker than protected. And then or a bearish status, or it has a naked status. Naked status means it's completely vulnerable, okay, to down moves, and those kind of stuff you want to stay away from, and you'll see it. And everybody's going to say, well, don't all the top 10 stocks in the SP 500 influence the index? And I said, well, the index influences them, and they influence the index back and forth. But you're going to see some fantastic numbers on these, on the overall average of what protected stocks do and what naked stocks do. Okay, it's a vast difference, and you'll see a few of them here. Here's Eli Lilly, and this one flip-flopped back and forth. It was naked at the beginning of this chart, and then it flopped to protected. And once traders know a stock is protected and not going down, they're only going to shoot it one way. Everyone's going to jump on board. Okay, it's like being in the pits. In the trading pits back in the day, when you see the big whales coming in, the largest traders and the largest companies coming in, buying, 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 okay, you don't want to try and take them on and go short. Okay, you're going to jump in with them. Okay, and they went naked again at the end of this chart right here. This is back in March, so don't follow this for right now. Okay, but you get this kind of stuff from us. These are our weekend reports that you get from us. Okay, and then on our weekend reports also you get the economic markets. You're gonna get 9 of the top economic markets. This is the yields. 10-year Treasury yield is what we follow for you guys, and these are the models that we have now. It's not just color-coded charts. I show you the models and their measurements when they're showing the buying scenarios and the selling scenarios. Okay, I show you the actual models. I just don't show them right here to everybody. Okay, so, and this is what they did. Green obviously means it's a bullish scenario. Red's a bearish scenario. The market's going to go down. Yellow is going to chop back and forth, and then you see what it does, and it's unbelievably accurate. You guys know that I was an institutional bond trader back in the days, and I've seen a whole different load of different models between fund managers, banks, everybody over the years, and I formulated my own quite some time ago, over 25 years ago, and this is what it does, and it's just a constant repetitive scenario in the interest rates. This is crypto. A lot of people want to know where crypto's going. The crypto market moves in not, I don't want to say one way, but there's two different ways that it moves, and so you have to follow a model of the measurements of it to tell you what's the probability of this thing moving down now or up now. Okay, and so everybody was all high and heavy on crypto when it got to 105 or 115,000, 120,000 back last year. And then we said, nope, you're looking at a top in this market right here. It's going to be pressure to the downside. In the volatile crypto world, this could be a 50, 60% move down. And it ended up being more than that. But uh, no, I'm sorry, it was right in that area. Okay. So, and that this chart's only updated until March again. Okay, but you get 9 different markets from us, and we'll update them weekly for you. We update the economics and markets. It doesn't help you trade, but it helps you position your life. Okay, for your long-term investments, or for your mortgages, or for your when you want to do your interest rates, gold. If you want to do some security in your savings, you'll learn precious metal stuff, or ETFs and things like that. Okay, so this is the Fed domination day again. Overall, what we did, there was a green bullish algo from the start, and then right after that, 40 minutes after the opening, we saw some releasing of long positions from London. Okay, right about 10:20. They were releasing longs. I notified everybody they were doing it. I said that's not a good sign. It doesn't show good for the bullish algo. So let's see what they do from here. Market moved, and then about 11:45, I said, hey, London's coming in and revaluing this market lower. Now, before the Fed report, that is not good. So you might want to reconsider the bullish algo because they're looking to take this thing down. And then when they move that thing right up to the Fed number, just a minute before the Fed report, I said they're releasing long positions. This thing's going to dump. and it dumped down. And then I told people when they're buying again. And it was just a roller coaster back and forth. Okay. And there's no way for me to do it on email, of course. I have to do it on phone, Telegram messaging right to your phone. Okay. And you get it within seconds and it goes right to your phone, and then you see that. And I teach people this stuff though. All my members, I teach them this method of analyzing. That way, you know exactly what I'm talking about, know exactly how to analyze it. So when I send them that message, say, "Hey, London's doing this," um, you guys take a look at it. Say, "Hey, where's it at?" There's a dealer book value there. The algorithms there. They're releasing their longs. Okay, and this is what's going to happen. So we tell everybody, come work with us. You need this information, whether you're trading stocks or stock indexes. There's no way you can get this information anywhere else. It's just not out there. This is a private community that we have. I'm only accepting 100 members for the private community, for the public, and the rest of my business is going to be, commercial and bigger term professional clients. Okay. And that's the end of our webinar. Thank you very much for coming. For you to get on this service right now, you need to go to iwave.pro/order. Okay, it'll take you right to an order page, and you can pick whether you want the trader service or the professional service. And it's an annual subscription because we don't mess around with the monthly stuff. It's just too much of a headache, and that's not my primary business anyway. So if you got problems with anything, send us a message at support@iwave.pro down there on the lower right-hand side. Go ahead and write those down real quick, please, and go to the site iwave.pro/order, and you'll be able to get this information. We'll have this stuff sitting on your desk and maybe even on your phone first thing tomorrow morning. Okay, so we look forward to it. Get this information, and you will actually have a bigger insight to which way the markets are going every single day, more than I would venture to say 99% of the traders out there. And I don't care what they know and what platforms they have. Nobody has this stuff. Okay. This is stuff I've been staring at for 40 years. Okay. Get on this. I look forward to having you on. It'd be my pleasure. Thank you very much. Have a great day.